Hello, this is Datatraderpro with a nightly market wrap, Thursday, January 5th. First of all, Happy New Year. This is our first market wrap of the new year. And yeah, so we're getting into an interesting spot in the market. We'll get into that in a moment, but there's been a lot of block trade activity recently. Some markets, a lot of markets look like they're in turnaround zones, so we'll get right to it. Okay, sectors, basically retail was the big loser of the day. US dollar was down, and when that is down, it's not 100% correlation, but often commodities run, and we had a run in energy, metals, general commodities, and things like that. So that's to be expected. The leaders of this rally, like the Russell, are now doing worse. SP was roughly flat. Dow was negative but roughly flat. Russell was well down. NASDAQ was up. These types of divergences are not terribly healthy in my opinion, and tend to happen most often around market turns. We can look at the market map. The advanced declines, bearish but not terribly so, fairly even across NYSE, NASDAQ, S&P 500, NASDAQ 100, basically flat. Russell 2000 down a lot, negative 4.55 to 1 on the advanced declines. So net volumes negative on pretty much everything. So yeah, so a bearish tinge to internals, bearish to flat, with Russell obviously, with it being down the most, the worst internals of the bunch. Okay, trend. Oops, what did we do here? We lost our trend page for a moment. Okay, there we go. Back. We had a neutral range day today. The dollar weighted buying pressure, which is our own proprietary measurement of key market moving stocks, and the dollar weighted volume, money flow essentially going in and out of those stocks, was bullish today, and price was up. Started the day a little bullish and went, like most neutral range days, went negative and positive again, and then ended the day with a rally like stocks. However, the MCC, which is our faster moving version of the McClellan oscillator, it's an intraday version of the McClellan, was negative all day. So again, we see an unhealthy divergence. Remember, NASDAQ and Russell, two of the leaders, are divergent. Our McClellan, our version of the McClellan, and the dollar weighted are also divergent. So not terribly healthy. Breadth was reasonably neutral on NYSE, reasonably neutral on NASDAQ, and as we saw, it was quite negative on Russell. But the trends are reasonably bullish, so nothing to really panic about yet, except to keep an eye on this, because with the Russell starting to sell off, that was a market leader, and if that could be starting to lead a turn downwards as of today. Volatility space has been really low for a number of sessions. Obviously, after the election, we had a huge rally up. Volatility got clobbered, as it tends to do when the market rallies. It stayed low for a protracted amount of time. But when we see things like the short-term version of the VIX, which is VXST, it's a 9-day rolling implied volatility index, it gets down to 10 or below, or even into the 10s, is generally primed for a bounce. It means that the market's getting overly complacent, and nobody's really worried about the potential of a down move. So it seems like everyone's bulled up, and definitely price action has been bullish, and we don't want to fight that, but we also want to keep in mind that there are some important internal measurements that are showing that this rally could be thinning out, if not reversing. So VXST in the 10s or at 10 or below is a reversal signal. VIX at below 12, definitely in the 11s, and it stayed between 11 and 12 all day, is a reversal signal, so something to keep an eye on. What you should also be keeping an eye on is the volatility of volatility. Volatility has its own VIX called the VVIX, and this is basically what we're measuring here. So when this goes positive, it means that volatility of volatility is on the rise. And certainly when that gets into the green, you'll start to see things like VXST percent and VIX percent rise, right? So the longer term, the 3-month version of the VIX, which is VXV, has stayed somewhat elevated. So as it tends to, because it's measuring 3 months out, anything can happen in the market in a 3-month time span. So it's not. I wouldn't say it's on its it's on its bottom, but it's in about a normal range for what it is. But I would say VXST is on an extreme low, and VIX is basically the same on an extreme low. Okay. All right, let's get right to block trades. Block trades have been fairly clear and easy to read. So we had pop up. We have a lot of these late distribution prints, and we've moved down. We had a lot of buys on the recent low. We had about a 7 or 8 day correction that came in early into the new year, and then we had a rally, right? And when you see a lot of prints on these lows and price goes above and never challenges that again, and then especially when you see the confirmation of the late buy prints coming in, you just use that as a level of support. So your bottom support here on SPY is 223, 28, 29 area. Your mid-level support is 225, 23, and we're definitely above that. So we're in a bullish posture. However, from the last recent high, we had quite a bit of selling. We moved down, we've moved back up, and you see all the late sell prints. When we went down, we moved back up, there was a ton of sells here. And now we've moved back up basically right into that level, right into the 225. This was 52, 53 area. We've moved right back into 226.53. We've moved right back into the 226.53 area on the highs. But we had a very large print of 8 million shares, just over 8 million shares, right at close on SPY today. So that may be another sell. You don't generally see institutions buying the highs, and when you get a sell and a retrace back and something else like this, it could very well be a large sell print. Now that's just speculation for now. The way we use these prints most effectively is bullish above them, bearish below. So we don't want to overthink this. We have a very clear line of the last high sells, late sells. We moved up here and there's a large print. We'd like to assume that there's sells, but we don't want to marry that idea in case we're wrong. That could be a very large buy. We could be retesting for a breakout. So basically, this is your line in the sand. 226.53. We'll be bullish above there. We'll be bearish below. If we drop below, this is your first line of support. This is your second line of support. Okay? So that's how to read these block trade charts. QQQ has been funky. It was the lagger on this rally for a lot of the rally. It was the last to make a new all-time high. Russell was leading at that point. It caught up eventually. It did make a new all-time high. And it since then it's been a little slow moving. Today it was leading. There's a ton of buys off the bottom and a late print, so that's your line of support. 118.39 to 40. Midline of support 119.58. 120.21 support as well, but we've got some sells up here. So again, we expect this to be support. If we're going to go higher, it's going to have to go now. Same thing with SPY. It's right up against these lines of resistance, and with a lot of prints there. So if it's going to go, it's going to break out tomorrow. So I believe there's some key jobs data tomorrow. So that is likely to be a catalyst. IWM obviously came off its highs. A lot of buys on the low on support. We put out a notice about this, that there were buys, and we thought this was a buy, and it turned out to be correct. There was a ton of, every time price came down, there was a ton more prints, and price went up. So, but then again, we had a lot of sells at the top, millions of prints added up, and we dropped. Today, during the middle of the day, we noticed a couple of 800,000 share prints right on the spike low mid-morning, and we thought that that would be a stick save in the market, and it turned out exactly to be that. Now, price didn't rally all the way back like it did on SPY and QQQ. QQQ made a new high for the day, where SPY ran right back up to its prior levels. IWM came nowhere near. So yeah, so this leader is a little weaker. So we're going to have to keep an eye on that. We're seeing some signs that maybe a reversal is upon us. So we're just going to have to watch those levels carefully for confirmation. All right, the Dow, obviously a buy off the lows. Sorry about that. Buy off the lows, 197.35 is your support level. Sell off the high. It did not retrace all the way back up. So, we expect maybe it's going to retest these levels, and then we'll see what it does at 199.22 level, roughly, right, where the prints are. Okay? All right, very quickly on that. Volatility, VXX has been, there's been some shares, but price has sliced right through them. So, obviously, we had a run up as we corrected on indices. We had a run in volatility, but we had a lot of sell prints on the highs, and price immediately dropped below. So that was a good opportunity to short VXX or take VXX puts or go long XIV. And you see the opposite here on XIV, where you had some buys around the low, price moved up, and maybe we might be getting a sell, which would tend to agree with what's happening, what we're seeing on SPY, etc. UVXY generally does not get as large prints as VXX, but we're seeing quite a few small ones on the low. So we'll just have to see. UVXY is problematic because it decays constantly. It's subject to a leveraged negative roll yield loss that is roughly 2 times the negative roll yield of VXX. So counting exact levels on UVXY is problematic because it tends to just decay and decay and decay. So, but keep an eye on it. Every once in a while, like here, I mean, this was an obvious short. There was a lot of activity up here, and price went down. So until we see a lot of prints on VXX and UVXY on the lows, and maybe we're seeing some of those corresponding, but they're not of any major size yet on XIV. So we'll keep watching that space. Sectors, yeah. So right now, I think out of sectors, the most important looking thing right now is the dollar. Right, the U.S. dollar, and UUP is the highest liquidity, highest volume ETF for the US dollar, and that's why we track it. We didn't have a lot of activity. Dollar basically had a triple test of its high. We'll look at a chart of the dollar later, but had a triple test of about the 103.60 area. Couldn't get through there, and we turned down. UUP just got a fairly large print, 500,000, another 210,000 on the lows today. So that may be significant. If it is, and I believe that we'll see at least some kind of corrective retrace, we should see a bounce from here using these lower levels. This level. 26.23, give or take. Here's 26.18. So within a little wiggle room, that should be your local low. You should probably get a corrective retrace. What's going to happen after that, we'll have to wait and see for additional block prints to come in. Okay, metals picture is very interesting. Okay, and we finally are starting to get a couple of big prints on the highs. So we posted some tweets when these prints happened. 1.435 million on GLD, corresponding 2 million print on SLV. Here just over 2 million on pretty much on the exact lows that day, and metals started their bounce. So yeah, so that was fairly predictable and easy to read. We've been watching for corresponding sells. SLV hasn't happened yet. GLD has started to get some on the highs today, right? So right up here, 112.58 area, thereabouts, Yeah, 112.58. So we're going to have to see if gold's going to be bullish. It's going to have to power ahead now. Otherwise, it's likely to have a corrective retrace. It's had a pretty good run. I mean, it's had a $5 run up in a fairly short period of time. So, you know, what was the recent low on futures? Was about 11.20, mid 11.20s, something like that. So, you know, gold has come up $60. You know, in dollar terms, on futures, has come up $60 or thereabouts off the recent lows. So that's a solid move. But I expect there to be some profit taking. The futures are right at a resistance level in the 1180s. We're going again into a important data day tomorrow, and you know, there's likely going to be some profit taking, if not a correction downwards. We'll see what that correction looks like, and then see if gold has any strength to power through to a new high. Hopefully it does. They've been deeply oversold, the metals, for quite some time. GDX has had a great move. GDX is a little harder to read on block trades because it gets these huge prints at the end of the day. They're always right at 4 p.m. on the nose, and they tend to be rebalancing prints on the triple leverage ETFs that are based on GDX. So it's a little harder to read sometimes, but the levels still work. If you look at here, this is your local low. There was a lot of prints. As long as you stay above that, bullish. You've got a big print here. We'll see what happens tomorrow, right? Okay. Energy, wow. Oil has been all over the place, hasn't it? Oil traders are pretty frustrated. I know. I've been following them on Twitter. We had some sells. We've had a pop above and a drop below. We had some buys. So, you know, price is moving back into the middle end of the range on USO. Generally, oil's been going up and up and up. So, you know, where that correction is going to come in, we'll see. You know, obviously it's well out of the 40s and well into the 50s now on futures. So UNG had a big down move over the last few sessions. So UNG for the last couple of years was beaten down and went down to a low of $1.60. This is not UNG. This is the natural gas futures. UNG is the ETF based on the futures. So what happened was that was a all-time low. We came up off of that with a very strong rally this year that rallied, you know, basically right through the summer, which is generally the low time for natural gas because usage obviously is mostly predominantly in the winter, in the colder parts of the country. So we had a rally that went, you know, spring, summer, fall. You know, there was normal corrections in there. And that basically we ran up on the futures up to about the 390 level, just short of $4. And then since then, and that was just a few days ago, a few sessions ago, we dropped about 20% in a very short period of time. So they got deeply oversold. A huge move down. Natural gas report was today. Off of that report, it was a slightly bearish number, but not terribly so. We had a big spike low, but there were prints. There were prints here that we mentioned in a tweet yesterday, and I thought that we would bounce off the report. Instead, we went down, but then miraculously we came all the way right back up. So we were above the close yesterday, so we're in the bounce zone. I expect, you know, we'll probably have a normal retrace and then another move up. So I'm bullish UNG off this bottom as long as the local last bottom of today holds. I'm bullish for at least a decent retrace back up. So keep an eye on that. What else are we going to get into? For those who haven't joined us in a while or those new to our site, this is a summary page. You can find it on Block Trades Summary. This is essentially a time and sales table of all the block trade activity. You can click on the symbol, on the triangle marker next to each symbol, and look at the last 15 days of block trades. It'll give that all to you. You can look at what levels and how price reacted off of that on everything. So UNG and so on, right? So Very useful if you want to go back and have a look and didn't remember where the where the big activity was. You can see in where you had millions of prints and the exact price level and time and that sort of thing. What else are we going to look at? SPY volume profile. This is a bit longer than our normal market wraps because I haven't done one in a while, and it's the first one in the year, and it looks like a lot of things are turning. A lot of markets are turning now, so so I want to get into a little bit of detail today. Yeah, so SPY volume profile. This is a volume profile chart that consists only of the volume of the largest block trades. So any block 250,000 shares and above in the last 6 months is counted on this chart. So we're right on a I would say in a zone of support here, upper support. So as price goes above here, this will be support. If we drop below here, it'll be resistance. We recently came down into this area but didn't go through the gap down into the lower area. So we found a fair bit of support up here. Definitely price action has been bullish, but if we don't make a new all-time high very soon and break out of those lines of block trades, it's likely that we're going to have a more significant correction. What else do I want to show you? For those who are new to the site, we have these intraday dashboards that are for all 4 major indices markets: the S&P, the Nasdaq 100, the Russell 2000, and the Dow. They're buy and sell signals when the market is live. We've got internals pertinent to each market individually. They each have their own tick, their own volatility, and advanced declines and volume delineators, and a tick accumulator. When all of these are in agreement, you will fire long. If they're all green, if they're all red, it'll fire a short. You'll see it on the chart, and it's a good thing if you're a Nasdaq or an NQ futures trader or a QQQ trader, or you trade QQQ options. You probably want to watch this chart during the day. If you trade ES or SPY or one of the leverage ETFs based on SPY, or SPY options or SPX options, you probably want to keep an eye on the SP 500 version of that. Okay, I think that's it for now. We've covered a lot today. You know how our view of the market is right now. It's definitely price action has been bullish. Volatility is deeply oversold and likely at a bottom. We're seeing block trades on a high. We're right up against those highs, so we're going to have to wait and see. We're either going to break out or we're going to break down, and my advice would be to watch and wait for that to happen, and no problem following a trade. If we break up above those SPY prints, I'm happy to go long for new all-time highs. We could get a significant move if that happens. So, and if not, then that's a double top, and we're probably going to get a significant move down. So either way, I think we're at a critical moment. Stay tuned for more. Thanks for joining us. Bye-bye.